categories of markets. You may categorize markets in various ways. Think about this. Based on products that are bought and sold in the markets. What about based on currency that is used? Based on the number and types of participants? Based on whether it's a physical, a non-physical, virtual, digital type of market, etc. Then lists probably can be extended further. Let's examine each of these in one by one. So first one is based on product. Farmers market or product market. This is the first one, which is essentially a typical farmers market. You'd be very familiar with what exactly it is. So it's either a farmer or a trader who is basically acting as the seller. They have brought in the produce they have harvested, berries, tomatoes, apples, etc., or prepared using farm produce like jams, pickles, etc. The thing to notice is that they are selling something physical. These markets have maybe further categorized based off of the categorization of the products. Sometimes you may have produce which is falling in a specific category. In other cases, it might be something in a different category. So the next one is labor or service markets. I mean, you might call it, okay, what do you say, based off of the product, but I meant based off of what is being sold. You can call it merchandise, you can call it product or service. Point is what is being sold. Labor market or service market. So in this market, you as the seller, you're trying to sell a service, essentially, let's say landscaping, snow cleaning, manicure, pedicure, etc., etc. And the buyer is trying to buy one of these services, right? A special form of service market is essentially the labor market, where buyers are typically businesses, enterprises, the government, etc., all trying to basically buy employees by paying a wage or getting into a contract to pay them regular wage for work on a regular basis. Moving forward, the next one is a very, very interesting one. It's information markets. This is a very special type, as I mentioned, of market where information is bought and sold. So remember Cambridge Analytica? Remember what Facebook, and as now it's known as Meta, sold to Cambridge Analytica? Is data, and they sold a lot of data. They may or may not have known what exactly it might have been used for, probably didn't know, but that is basically data. Data is a type of information. It's a crude form of information. So that's an example of an information market. Now, going forward, what exactly do spies sell? I don't mean spices, I mean spy or spy. Think about Cold War. Think about espionage. So they're selling basically information. And we're not necessarily sell information or buy information with money. In certain cases they do. They might buy information with money. Then they're selling it to their nation, their employer, and getting paid either in money or in some other kind. Moving forward with examples, what exactly does New York Times sell? That is news. News is what? It is, again, information. Thus, in these markets, basically you've seen, information is the product that is sold. Information has value, and thus there is demand for this good, and especially if that information is new or if it's exclusive information. That is what information is sold for. It's for its value. Let's take up one more example. Derivatives market. This is another very interesting type of market, but essentially here something very different is sold. So the value and the price of products in these markets are derived from other financial products. So examples of these products sold in these markets are options, futures options, etc., or some sort of like structured products. It's a very complex market, and for this episode, I'll kind of not go into really down the rabbit hole, so to say. But it is another type of market where you're essentially buying some sort of a financial product on top of something else. Derivatives market. So now if we start to do the categorization from not the product's point of view in terms of like what is being bought and sold, but in terms of what is being paid to buy and received in return of a sale. That's your currency. So herein we would typically land up with our US dollar denominated markets, euro denominated markets, Japanese yen denominated markets, Canadian dollar denominated markets, and then things like Bitcoin denominated market, cryptocurrency denominated market. So anything that might be able to define as a currency, if that is used to buy and received in return for a sale, that would define one category of a market based categorization based off of the currency. Now let's look at categorization from another perspective. What if we try to categorize markets based off of market participants, which the market tends to favor? Then we might land in specific categories of markets such as buyer's market, wherein it tends to favor the buyer of the product. And then you have seller's market, wherein it tends to favor the seller because more and more people are trying to buy. There is high demand, let's say, for example. Then you may also similarly get a broker's market, wherein if somebody is acting as the broker, might benefit a lot as compared to the buyers or the sellers. Similarly, another type of market could be, or at least a situation in a market could end up becoming called a trader's market, where the market conditions might favor more of a trader than either the buyer or the seller or even the broker. Another way to look at markets could be by the nature of the market in terms of if it's physical or non-physical. The first one would be obviously a physical market. It's a type of market where you have to be physically present to be able to trade, to be able to buy or sell. This is common type. Your farmers market is an example of that. Moving on, then you may have catalog-based markets, and in this case you receive a catalog via mail, you look at the products, you look at the pricing, and then you send a letter, so to say, and this is something that used to be present. Nowadays I don't know if it still exists anywhere, but probably in a combination format it might. Then you write and you send your money to get an order of that product delivered to you. So that's your catalog-based market. Similar and the development on top of the catalog-based market is your telephonic market, wherein again you may receive a catalog, or you may have to call a specific number to find out what set of products are there, and you order over a phone call. That's another type. Then you get to the digital markets of today's day and age, so to say, which could be an e-commerce website or an app, wherein you just log in and then you see the products out there, you order right there, and the product arrives. So different types of market categorization based on whether it's physical or non-physical.